Good morning, ladies and gentlemen, and welcome to the show on this Wednesday, the 8th of December, 2021. Thank you for tuning in. I'm glad to have you guys here. Now, you know what? I told you guys about this problem, this monster of a problem, how we're making ourselves dependent on it's interdependencies, is what it's called. Interdependencies. In other words, you got a farmer. In the old days, they used to use a horse and a plow, and there was nothing to go wrong. Now you got all these machines made from different countries, and you need special parts and everything to keep the tractors running and everything else. These are interdependencies. Just like when you go to the store to buy something. In the old days, you used to have a cash register. It didn't run on electricity. You pulled a handle, ka-ching. You had simple cash. If there was a crisis or something, you could still go to the store and buy something. Now, the internet's down. You can't buy nothing. These are interdependencies. Well, guess what? The trucks out there. I didn't know about this. I've just found out about this. Okay? The trucks out there have these emission things put on them now. It's a sensor and stuff. The big diesel trucks, that come to your local store or grocery store or whatever, they have these sensors on them now. And they have to put a diesel fuel additive on in there. It goes by different names in different countries. But it's a diesel fuel additive that they add to the diesel fuel, and the sensor senses that the additive's there. And then the truck runs normally. But if you don't have any of this additive, if you got a truck, I'm talking about all the trucks out there, or a good chunk of them anyway. If you don't have this additive, and the sensor doesn't sense it, then what happens is that it puts the truck on something called, it's a mode that puts the truck in, where the truck is like on, it won't run right. The diesel trucks won't run right. It's like low power mode that the sensor puts the trucks into. And it's all connected to the truck's computer, so you can't override any of this stuff that they've put in. Okay? So you know what happens is, the truck goes down the highway in this limp mode, or low power mode, and the truck won't go any amount of speed. It's like the engine's going to, so the engine's not running like normal. Normally an engine will rev up and the truck will take off. The truck will go up to whatever the speed limit is on the highway. Maybe it's 70 miles an hour, just saying. Well, with this sensor not running right, the truck might only go 30 miles an hour, or 40 at most, or 20 even. You just don't know. It depends on the sensor. Okay? But you got to have that additive in order for the sensor to sense the additive in the fuel. Well, guess what? There's an enormous shortage occurring right now of this additive in Australia, it's threatening their whole supply chain. And this shortage is going to extend worldwide. The shortage of this additive. I think in some places it's called AdBlue. You put it in the diesel fuel for the trucks. Well, this is our trucking industry. So we've already been through a tremendous amount of pain in our shipping industry, right? Now it could start to extend to the trucks too. And this is the core of how stuff gets to the grocery store. Now there's a shortage of this stuff called Eartha or something like that. I don't know what it's called anyway, that they make this stuff out of. There's an absolute world shortage of it. And so, I don't know. If you guys are out there, you're truckers, you might want to put a little bit of this stuff away for yourselves to keep your trucks running. But at any rate, this could adversely affect the shipping industry something enormously compared to what we already been through. Now we're going to talk about something else entirely. The last 2 or 3 shows I've done, I've been hinting at something for you guys. What I've been hinting at is, what would happen? Well, okay. For you to understand this is, all the time I was becoming an adult man, or even into my middle age, every once in a while we get a bad flu season. And I would notice, and you've probably noticed this too. You guys out there probably notice what I'm going to talk about next is, you notice during a bad flu season, sometimes things can get really slow if the flu's going around really bad. Okay? Your local restaurant might be closed because all the people are out sick. All their employees are out sick. Or you might go to a store, a big box chain store, and you might find you're not able to get help finding a certain item or whatever. Yeah, they're open, but there's only one register open because there's a bad flu going around. Now, this happened all during the years I remember, like the last 50 years, I remember this happening if we get a bad flu season. But that's a bad flu season we're talking about. And it can slow things right down to where a lot of businesses close up because their employees are all out sick. Well, you've heard of this before. This is nothing unusual. I'm not telling you something you don't know already. But what were to happen? What would happen if everybody were to not feel good at once, at the same time? Everybody. Everybody is staying close to their bed, taking their temperature. Everybody. Not, maybe not exactly everybody, but I'll say a enormous chunk of the population. And not just in your community, but in every community, everywhere on Earth, all at the same time. If everybody was like unwell, let's just say unwell, at the same time. Well, we've never experienced anything like that before, ever. But there's another side to this, too, is after time passes, everybody would start to improve at exactly the same time as well, more or less. More or less, right? What could a situation like that do to the economy? We're just talking theoretically. If something were to come along and make everybody unwell for a few weeks or a few months or whatever, and then were to start to just kind of float away, whatever it was, the black cloud, whatever was causing it, and everybody started to feel good again. Well, this is almost like, say if some extraordinary mechanic, had an engine, had a big 350 block engine, and he had it up on the thing, on the testing block, and everything else, and it had some sort of fuel pump problems. So it was a 350 small block, and he had made the engine himself, and he was the most excellent mechanic in the world, or a very good mechanic anyway, and had the engine sitting out in the test block, so he started to try to run it, and he couldn't get the engine to run. First, it was like it slowed right down to almost a stall, right? And then all of a sudden the fuel hits it, it starts to rev up, and it redlines. And then pop! It blows a piston. Okay? I'm looking at the world economy, and what I'm seeing is we get a tremendous slowdown. Everything just kind of grinds right down to where everything's just slowing right down. And then all of a sudden the fuel hits it, and then it starts to speed up, and it starts to go too fast. Well, why would it do that? You guys probably interested. Why would it do that? Because as it slows down, they're going to pour money into the system at a certain point. They can't help but pour money, because what we're facing is nothing less than a 90% drop in the stock markets. At 40%, the system would freeze up. It can't withstand what would come. If all the bubbles were to burst, the bubbles that they've created right now, the system would lock up. They're not going to let that happen. But we're on that downward trajectory because there's a lot of problems in the world right now, and we're facing a giant slowdown. So they're going to have to add more. They're going to have to add more fuel to this economic engine. But we can't stand any more fuel because there's a lot of unburnt fuel out there right now. It's adding more fuel to the fire. So the racing up of the engine is going to be when everything starts to take off again on the other side. That's where we're going to start to face hyperinflation, and the hyperinflation will go faster and faster until a piston flies out. This is just the way it's going to work. Okay, so how much time we got before the piston flies out? That's probably what you guys are all asking, until the piston breaks. How much more time we got? We got a fair little bit. And what we're going to experience probably this summer, moving into fall, is going to actually feel good for some people. Depends on what side of this you are on. If you're on the side where you're reliant upon a fixed income, it's not going to feel good. If you're on the side where you're relying upon maybe Social Security or something like that, it's not going to feel good. Maybe if you're on the side where your money or your income is very fixed. But if you have a job that's going to start earning more, well, then you're not in such a bad stead when this actually happens, So we got this coming in. And things are going to go faster and faster. Prices are going to go up quicker and quicker. They're going to have more and more troubles out there with things like delivery systems and a population that starts to come alive again this summer. And they want to live. They want to get out there. They want to spend money. They want to take vacations. They want to travel. They want to do everything that they haven't been able to do for a couple of years. And it's like my show I was telling you before. It's like the cows coming out of the barn. They're going to want, and there's going to be not much to give because everything's been so slow, and they're going to clean off the shelves of a lot of items. Prices are going to go up amazingly fast, but there's a certain percentage of the people out there that these price changes are going to really come down hard on them. Harder and harder and harder. And that's why the piston's going to crack. Okay, I've rambled on enough about this, but I figure the piston's going to probably crack someplace around the end of the year, the end of not this year, the end of next year. The piston's going to crack till probably through the first quarter of next year, in 2023. I mean, and then the piston's going to crack. Well, what's that going to look like? The piston cracking is going to be the most enormous thing we've went through yet. It's going to change everything. In a heartbeat. So fast. It's going to change everything. It's going to change the entire world, the complexion of the entire world. But it's going to be a very, very rough period indeed. But it's going to be what you've been waiting for, what you call the reset. That's when the reset's going to happen. And that's the piston flying out. You just cannot take everything that's invested in all of these fiat currencies, because they represent everything. You drive through a city, look at every house in your city. You got a big city, look at every house in your city and say, what's that house worth? What's that house worth? What's that house worth? It's all valued in dollars. Okay? Now, right now, everything's valued in dollars. Or, depending on what country you are, if you're in Great Britain, everything's valued in pounds. If you're in Australia, it's the Aussie dollar. If you're in Canada, it's the Canadian dollar. If you're in Japan, it's the yen. You get my point. Everything's valued in these fiat currencies. You just cannot make a quick transition where you make those fiat currencies all totally worthless. You're making everything in the world totally worthless, and then transfer that value around. You just can't do that without massive changes, and that's what I'm calling the piston breaking. So the engine's going to rev up faster and faster, and the piston's going to break. That's going to be the biggest change of all, is that wealth transfer that occurs when the piston breaks. So I'm giving you guys pretty accurate timing on this. I'm saying probably very late in 2022 or early sometime in 2023. And that's, I mean, I'm pinning it down pretty close. But the thing is due to extenuating circumstances, it could delay a little bit longer. But it's inevitable. This is what's going to happen at the end of the hyperinflation. Because all of the fiat currencies are becoming worthless. That's what the hyperinflation is. And you just can't transfer all that wealth overnight without it causing a tremendous upheaval in the world. More of an upheaval than we've ever seen yet. The biggest upheaval of them all is this wealth transfer. When we're talking about a currency reset. Basically, the currency reset's not going to happen until the currency's practically worthless. So that means what we're looking at probably is a rather quick hyperinflation when it finally does really start. And I think the events that are going to happen in the next 2 months are what's going to trigger it to start. Now, I'm being very specific with you guys, so it probably was important you listen to me ramble on about this, because I'm giving you guys a clearer picture of what's coming right ahead. We're in for big changes this year and early next year. Massive changes. And you guys should have been preparing for it all along, but you're still not too late to prepare for this. And you say, well, how do you prepare for it, Glenn? Precious metals is the first place I'd say to you to start. Is start to research precious metals and think about precious metals. And find out about it. Anyway, let's get the chart started right here. Take a look at what's going on. We're looking at precious metals right here. And the price is low, so this is a good starting point for you guys. 22.42. 22.40. Down 9 cents on silver today. And silver, it's a non-renewable resource. They go into how they get silver is they go in, they find big blocks of stone, basically, and they just basically pound those big blocks of stone down to a powder, run them through conveyor belts and stuff. Well, the first crushing, they crush it down to something like 4-inch oversize, big 4-inch rocks bigger than your fist. And then they crush those till they get them down to gravel-sized rocks, and then they crush those. And they keep going until they get it into a powder. They put that powder in big tanks, and they got big mixing things, and they pour chemicals in it to separate the silver from the powder. And then they have to go through heating processes where they actually melt it all down, and then they extract the silver. And so out of like a ton of rock, which is like, maybe if we're talking a metric ton, I think it's 2,200 pounds of rock, they'll get a few ounces of silver out of that. But they got to crush it to powder, and they got to put all those chemicals in. You're talking about thousands and thousands of pounds of crushed rock. And you know how much energy that takes? You want to find out how much energy it takes? Put a pair of safety goggles on and take a little rock from your driveway or whatever, beat it down flat with a hammer until it's powder. Your arms will be tired by the time you're done. Just one little pebble. That's how much energy you think. Now think how much energy it takes to crush a ton of rock down to powder. And you're starting to learn how much energy it takes to make silver. That's energy involved. And that energy has a price with it. And I'm telling you, they're giving you, when they're charging you $22 for an ounce of that pure white precious metal, they're giving you value. You're buying value. A lot of value there. That's what you're buying. You're buying hours of work. It took it to get it into that shape and that everything. The processes involved. And there's limited supplies of this stuff. And they need it. They need it for industry. They need it for making almost everything, including clothing. It's even in your shorts. They use it to inhibit bacterial, like odors and smells. They even use it in clothing. It's in everything, and they need it. They cannot produce the items without it. Yet the price remains low because what we have here, we have a bunch of paper market, which is all just paper derivatives being traded, not the real metal. Sooner or later, this is going to bust. And if you're on the right side of the trade when it busts, you're going to do rather well. Looking at gold today, $17.83, down 50 cents. Cryptocurrency, we're looking at $23.70. Now, I'm going to refresh the page and see which way this is moving. Is that $23.96? It's going up. $50,929 for a Bitcoin. Now let's take a look at the MOVE index today. The MOVE index is 88.14. Too high for comfort, but it seems to have been leveling off, not wanting to go above 90 the last few days. It's made a couple peaks. We're keeping our eye right on this MOVE index because this is an indicator of the credit markets. So I keep my eye on it because the Fed keeps their eye on it. Bonds and rates today, we're looking at rising yields, 1.51 on the 10-year. In the U.S. 30-year at 1.84, up 5 basis points today. Got to keep our eye on that. We got to watch that the U.S. 30-year does not go over too much over 2%. And the same with the 10-year. It doesn't go too much over 2%. It's pretty much safe up until around 2% on the U.S. 10-year. And that's when that's when fireworks are going to begin if it starts to go over that point. Now, this should be the dollar index, but I don't exactly know what's going on here. Here's our dollar index at 96.14 and going along sideways today. Thank you guys for listening. And think about this one thing. What happens if everybody in the world starts to feel unwell at the same time? Think about how things could close up. Just think about that for a minute. Think about the net effects. Maybe your mail might not even get delivered. Maybe your local gas station might be closed, so you can't even get gas for your vehicle. Maybe your local grocery store only has one person working in there. I mean, things could get seriously slow, like you've never seen before. And even yourself, you might not feel like even making breakfast. You might have such a headache. You might feel like you're hungover, even if you're not. But think what happens on the other side of that when everybody starts to want, and everybody wants to get out and go on vacation. Now it's summertime. We want to go on vacation. We want to have a picnic. Is the deli open? Everything. Want. We want to go on Amazon. I want to buy a new swing for my kids for my backyard. Oh, everything. Well, you know, I'm going to tell you guys something about Amazon. Amazon is one heck of a smart company. They might not run out of stuff. They are getting their own ships to do their own delivery. They've got their own trucking line to bring their stuff to the stores. They've set up everything themselves. Got their own shipping containers, everything else. And so basically, Amazon is setting themselves up in a position where they can not rely upon other people, rely upon themselves to get it from China to the shelves here in America or on their inventory so you can purchase it. Boy, that's smart. Anyway, thank you guys for listening, and we'll catch you guys in the very next show. Bye-bye.